Hi, welcome to our channel of IGNOU Audiobooks, Indira Gandhi National Open University, School of Vocational Education and Training, Sovet, Diploma in Business Process Outsourcing Finance and Accounting, Dbpofa, Revised, Bpoi 103 Procure to Pay, P2P, Accounts Payable, Unit 11 Accounting Entries for P2P Process, 11.0 Objectives. The objectives of this unit is to familiarize the learners with various commercial transactions that happen during the procure-to-pay process, how these commercial transactions translate into accounting transactions, and the reports provided by P2P team to the GL team at the end of an accounting period. 11.1 Introduction, as per the duality principle of accounting. For a business, the source of funds is always equal to the use of funds. This principle is also called as the principle of accounting equivalence. This principle has the following implications. Double entry bookkeeping. All transactions entered into by a business have two aspects, namely debit and credit. Total amount debited should be equal to total amount credited. Both the sides of the balance sheet will always be equal, i.e., assets, liabilities, capital. A business gets its funds by increasing liability or decreasing assets or earning income. Profit. It also implies that a business uses its funds by decreasing liability, increasing acquiring assets. Incurring expenses, losses. The above two situations refer to credit and debit respectively. Based on the above, let us look at the accounting treatment of various P2P transactions. 11.2 Commercial and accounting transactions. We will now look at how the commercial transactions of a P2P cycle are translated into accounting transactions in the buyer's account books. The journal entries for various stages in the P2P cycle are provided below. 11 February 2001 A purchase requisition is raised by the buyer. For example, the production department raises a requisition to buy raw material, specifying the quantity of raw material to be ordered, 55 tons. In this case, there will be no accounting transaction recorded. Raising a purchase requisition does not result in an accounting transaction because the PR is just a communication from one department to another, in this case from production department to procurement, that it needs the material. Nothing of commercial value has been transferred from one party to another yet. 11 February 2002 purchase order is raised by the buyer. Continuing the above example, the procurement department reviews the purchase requisition and raises the purchases order for 55 tons of raw material costing $780 per ton plus taxes, gets it approved and sends to the vendor, ABC Ltd. In this case, there will be no accounting transaction recorded. Raising a purchase order does not result in an accounting transaction. The purchase order is only a communication of an intention to buy from a buyer to a supplier. This is considered only a commercial transaction between two parties and it does not create any accounting transaction yet. 11 February 2003 vendor supplies the goods services but does not send the invoice yet. Continuing the above example, the vendor, ABC Ltd, supplies the raw material as per agreed terms. In this case, an asset, purchase account, goes up, debit, and a liability, good, received, not invoiced account, also goes up, credit. The journal entry will be reflected as follows. Look at the screen. Note, the goods are received by the buyer at his warehouse and they are stored away after their possession is taken over. GRNI account is a liability account where these goods are recognized in the books of accounts since the invoice from the vendor is not received yet and the buyer cannot recognize the amount payable as a liability till the invoice is received. 11 February 2004 vendor's invoice is received and processed. Continuing the above example, the invoice supplied by the vendor is processed and approved for payment. The invoice for $46,332 to be paid within 30 days from receipt net 30. In this case, a liability goes down, GRNI debit, on one hand, and an asset, advance, goes down, credit, as well as a liability, payable to the vendor ABC, goes up, credit. When the invoice is received and processed, the goods received that were so recognized as a liability because the invoice was not received yet can now be recognized as belonging to the buyer, and in turn the liability shifts from GRNI account to the amount payable to the vendor. Let us look at a variation of the above transaction. Vendor supplies the goods, services and is paid in cash. In this case, an asset, purchase account, goes up, debit, and another asset, cash or bank balance, goes down. 11 फरवरी 2005 payment is made to the vendor by check. Continuing from the above example, the payments team sends the payment to the vendor through the bank account. In this case, an asset, bank account balance, goes down, credit, and another liability, amount payable to vendor ABC, also goes down, debit. Let us look at a variation of the above transaction. A discount is availed from the vendor due to early payment. Let us say that the payment terms were 1/10 net 30, i.e. the customer can avail 1% discount if the money is paid within 10 days, otherwise the full amount will have to be paid in 30 days of receipt of invoice. The customer pays on the L0th day and avails of the discount amounting to $463 by paying $45,869. In this case, a liability payable to ABC goes down on one hand, debit, while another asset, bank account, goes down, credit, and an income account, discount, goes up, credit. 1.2.6 The payment is made void because the bank could not execute the payment instruction. Continuing from the above example, the bank could not execute the payment instruction as the vendor had closed the destination account. As a result, the payment needs to be made void. In this case, the liability, amount payable to vendor ABC, goes up, credit, and an asset, bank account balance, goes up again as the money was not transferred out of the bank account at all, debit. 11 फरवरी 2007 invoice is cancelled. This transaction has two versions. एक invoice is cancelled with liability not created yet. For example, the buying manager rejects the invoice amount $5,000 from the vendor ABC Limited and asked for a fresh invoice to be submitted as there is a disagreement on the price quoted in the invoice. In this case, since the invoice has not been processed for payment and liability not created for the payment, the cancellation of the invoice will not result in any accounting transaction. Hence, no accounting record is involved. Though invoice is cancelled with liability created, for example, the buying manager approved the invoice but before it is paid out, he sends out a communication rejecting the approval. In the meantime, the invoice has been processed and kept ready for payment. The buyer rejects the invoice amount $5,000 from the vendor ABC Limited and asks for a fresh invoice to be submitted as there is disagreement on the price quoted in the invoice. In this case, since the invoice has been processed for payment and liability created for the payment, the cancellation of the invoice will not result in reversal of the accounting transaction. In case the goods have been received against the invoice, the journal entry will be as follows. It is a similar situation as the goods having been received and the invoice not received yet. So we need to reverse the transaction recorded for the invoice processing itself. 11 फरवरी 2008 direct debit transactions. For example, a vendor LMN Limited with whom the direct debit agreement exists goes to the bank with a payment demand and is paid by the bank. In this case, the cash account is credited, cash goes out, and another account called cash in transit is debited. Cash in transit is an asset account that is used to recognize the money that is paid but not yet accounted for. Let us take this as a series of transactions. एक, the goods worth $5,000 are supplied but the invoice is not provided yet. Refer to section 11 फरवरी 2003 for more explanation. 2. The vendor takes a direct debit payment from the bank. 3. The vendor sends the invoice to the buyer and this invoice is reconciled against the direct debit payment. 11 फरवरी 2009 A late payment fee is paid to the vendor due to delayed payment. For e.g. the payment terms were that the money will be paid within 30 days of receipt of invoice, otherwise 1% per month late fee will be charged. The customer pays on the 45th day and along with the late fee 0.5% for 15 days, $232 on $46,332. In this case, a liability payable to ABC goes down and an expense account goes up. On one hand, debit, while the asset bank AC goes down, credit. 11 फरवरी 2010 withholding tax is deducted at source from the vendor's payment instead of complete payment. Withholding tax of 10% of the invoice amount should be deducted from the amount being paid to the vendor and deposited directly on the vendor's behalf. Instead of $46,332, the vendor is paid $41,699 and the balance $4,633 is deducted as withholding tax. In India, the equivalent term for withholding tax is tax deducted at source, TDS. Withholding tax is an amount withheld by the party making payment to another payee and paid directly to the taxation authorities. The amount the payer deducts may vary depending on the nature of the product or service being paid for. The payee is assessed on the gross amount and the tax to be withheld. The withholding tax is computed in that assessment. The purpose of withholding tax is to facilitate or accelerate collection by collecting tax from payers rather than a much greater number of payees, and by collecting tax from payers within the jurisdiction rather than payees who may be outside the jurisdiction. In this case, a liability payable to ABC goes down, debit, on one hand, while an asset bank account goes down and another liability, withholding tax, goes up, credit. The withholding tax is paid to the tax authorities. In this case, a liability, withholding tax, goes down, debit, and another asset bank AC goes down, credit. 11 फरवरी 2011 Some goods are found defective and are returned to the vendor. A debit note is also raised while returning the goods. This becomes the source document to make a debit entry against the vendor account. E.g. $4,000 worth of material was found to be of inferior quality and was rejected and returned to the vendor. In this case, a liability payable to the vendor goes down, debit, while a liability account purchase return goes up, credit. 11 फरवरी 2012 A cash advance is paid to the vendor towards part payment of the order. Let us look at this transaction in the following 3 steps. 1. Along with sending the purchase order, $5,000 is paid to ABC Limited as an advance in cash payment on the order. In this case, for the seller an asset, cash goes down, credit, and another asset, advance given to the supplier, goes up, debit. Though vendor supplies the goods services but does not send the invoice yet. In this case, an asset, purchase account, goes up, debit, and a liability, good received not invoiced account, also goes up, credit. 3. Vendor's invoice is received and processed. Continuing the above example, the invoice supplied by the vendor is processed. and approved for payment. The invoice for $46,332 is to be paid within 30 days from receipt. Net amount to be paid is $41,332. $5,000 was paid as advance. In this case, a liability goes down, GRNI debit, on one hand, and an asset, advance, goes down, credit, as well as a liability, payable to the vendor ABC, goes up, credit. In an outsourced environment, the teams entering the transaction data mostly enter it directly into ERP systems like SAP, Oracle, or JD Edwards. The ERP applications allow the users to enter the business transactions into the systems and automatically translate them into accounting transactions. Let us look at how these transactions are reported after they are recorded in the ERP. 11.3 Subledger to General Ledger. The accounting transactions, as discussed above, are recorded in the subsidiary ledgers or subledgers and need to be transferred to General Ledger for proper reporting. This usually happens on a weekly basis and at the end of the month. With the arrival of ERP and other accounting software, this procedure has become highly automated. However, there could be some discrepancies which may need to be reconciled after the entries are transferred from subledger to General Ledger. The procedure to do that, transfer from subledger to GL, is as follows. All the accounting entries are generated in the subledger. Though these entries are transferred to GL. 3. The control that needs to be exercised at this point is that the entries that are getting transferred from subledger to General Ledger should reconcile. 4. In the ERP, the transactions are parked in a temporary place called interface tables between SL and GL. 5. The GL team is notified that the subledger transactions have been posted. The balances for various ledger accounts are also communicated so that the GL team can reconcile these balances after the transfer is complete. 6. The GL team picks up the entries from the interface tables and posts them into GL. This process is also automated. The following account balances are usually reconciled: I. Accounts payable balance, the subledger and general ledger balance. Usually reconciles except in the following cases: A. If there are any revaluation entries, any accounting entries which have been revalued due to exchange rate differences during the period may give rise to discrepancies. B. Direct entries made in GL instead of via subledger. Any manual entries directly made in the GL may not reflect in the subledger and can result in discrepancies. C. Technical and timing issues in the ERP. Some other processes may be running due to which entries in the GL may be delayed due to technical reasons, which will also affect the reconciliations. The GL team needs to fix the errors and take care of these issues while posting the balances. 2. Cash in transit balance. The discrepancies may arise due to A. Duplicate payments, B. Rejected payment transactions are not correctly worded, C. Non-AP payments, like bank charges, repayments of loans etc. incorrectly posted in the AP ledger. 3. Accrual accounts. The discrepancies arise due to aged accruals, i.e. accrual or provision entries from the previous periods that have not been reversed yet. Care should be taken that the accrual entries of previous periods are reversed in the subsequent periods. 11.4 Month-end reporting. The objectives of the month-end process are: 1. To close the accounting activity for a period month. 2. To disallow any adjustment entries for prior period. 3. To disallow any backdated transactions for prior period. 4. Close the books of accounts to prepare reports and financial statements. In a P2P process, the month-end activities consist of the following. A provision liability is created against the unprocessed invoices. This will reflect the correct position of accounts payables. The unprocessed invoices include the invoices that have been received and the processing has not begun for them, the invoices that are under process, as well as those that have been received but have been put on hold pending clarifications from the client, vendor or any other party. 2. A provision liability is created against the processed invoices that have not been paid yet. These provision details are retained for follow-up and reversal in the next month. 3. Advance payments made against purchases are reconciled and recognized. 4. Bank reconciliation is done on the payments made during the period. The checks in transit are identified and cleared. The payments documents are confirmed as void against the corresponding payment rejections. The entries in the accounts of various vendors are transferred into the GL account. 6. Provision entries are made for the invoices expected but not received, e.g., utility and telephone bills, rent payments, etc. 7. Schedules related to payables are prepared for reporting, e.g., aging report. On payables, recoverable advances and their aging report, details on pending payments, details of provisions made, withholding tax payable schedule, etc. 11.5 Summary. A business gets into a variety of commercial transactions, financial and non-financial, with outside entities, vendors and customers, and within. Accounting is the activity which records, classifies and summarizes these transactions properly to provide information on financial performance of the business. Modern accounting systems work on the double entry method where each transaction has dual aspect of source of funds, credit, and use of funds, debit. In this unit we saw how various commercial transactions done by the business with its vendors translate into accounting transactions. Apart from recording individual accounting transactions in the subledgers of the account books, the AP team also needs to post these accounting transactions to the general ledger. The balances from subledgers and general ledger also need to reconciled after this posting. The AP team also needs to participate in the month-end process. It needs to provide reports on accruals to be made on the invoices that have been received but not paid yet. Thank you for watching. We will see you in the next video with the next chapter.